The following presentation explains how to calculate basic and diluted EPS. Here is the data we are provided, which we will use as our input to solve for the basic and diluted EPS as requested in the last bullet of this slide. Basic EPS refers to the earnings available to common shareholders divided by the weighted average number of common shares outstanding. When calculating basic EPS, factors which could affect the capital structure by introducing additional common shares are ignored. Such factors are known as potential common shares and usually take the form of convertible securities or options. We will discuss these further when we complete the calculation for diluted EPS. For now, our discussion will focus on the components of the basic EPS calculation. Basic EPS equation. By looking at the components that make up the formula for basic EPS, we analyze the problem and collect the items we need to make the calculation. Net income is stated in the problem as $560,000. Although the problem does not explicitly state that preferred stock dividends were issued, they still must be considered. The reason for this is because the problem states that the preferred shares are cumulative. This means that even though preferred dividends may not be paid in a given year, they are still accumulated based on the stated percentage each year, and when finally paid in a given year, the accumulation is paid first, and then the dividends due that year. Thus, net income must be reduced by the amount of accumulated preferred dividends each year, since these amounts will eventually be paid. Therefore, the amount of preferred dividends to be considered is $16,000, calculated by multiplying the shares of preferred stock by the dividend rate and par value of each share. In the problem, ISU Company purchases 30,000 shares as treasury stock. In doing so, they are removing, that is, subtracting, outstanding common shares from the market. The date ISU makes the purchase is important because the number of shares purchased is time-weighted for the fraction of the year they are not outstanding. By doing this, we are creating a weighted average for the reacquired shares. Since the shares are repurchased October 1st, they will not be outstanding for 3 months of the year. In the problem, ISU starts with an amount of common shares outstanding of 400,000. Since this is the beginning amount, they are weighted for the whole year, or 12 months out of 12 months. The 10,000 shares that are issued on July 1st are only outstanding for half the year, so they are weighted for 6 months out of 12. Filling in the formula for basic EPS from the information on the previous slide, we easily solve for basic EPS, which equals 1.37. The next couple of slides we will discuss how to calculate diluted EPS. Diluted EPS uses the same formula as basic EPS, but it also takes into account the impacts from potential common shares. The components of the problem that have potential to add common shares are the options and the convertible bonds. Not only do some of these components create the potential for additional shares, their tax impacts must also be considered. When calculating diluted EPS, stock options are assumed to have been exercised. They are accounted for using the treasury stock method. This method assumes that the options are exercised at the exercise price and then immediately sold, and that the resulting cash proceeds are used to immediately buy back shares at the average market price during the year. Thus, the additional amount of shares to include in the denominator of the formula for the options is 4,000 added shares. The dilutive effect of the convertible bonds not only adds additional shares, but impacts the numerator of the equation, since net income would be increased by not having the associated bond interest expense. Since the bonds had an interest rate of 6% and a face value of $300,000, ISU would recognize a yearly interest expense from the bonds of $18,000. Since the bonds are assumed converted, this amount is added back to net income in the numerator, net of additional tax expense. The stated tax rate is 35%, so the amount to be added back to net income in the numerator is $11,700. To calculate the amount of additional shares added, we must use the conversion rate provided in the problem. This rate is 45 shares per $1,000 worth of bond. Thus, $300,000 worth of bonds divided by 1,000 times yields 45 Thus, 300,000 worth of bonds divided by 1,000 times 45 yields 13,500 additional shares to be added to the denominator. Filling in the formula for diluted EPS from the information on the previous slide, we easily solve for diluted EPS, which equals 1.34. This value is less than basic EPS as expected. This concludes the video solution to this problem.